Call of Subros Limited, hosted by Aditya Birla Money. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note this conference is being recorded. I would now like to hand over the floor to Mr. Vidrum Mehta from Aditya Birla Money. Thank you, and over to you, sir.
Thank you, and good morning, everyone. On behalf of Aditya Birla Money, we welcome you all to Q2FY22 earnings conference call of Subros. From the management side, we have Mr. Pramod Kumar Duggal, CEO, and Mr. Hemant Kumar Agrawal, CFO and VP Finance. Ms. Shraddha Suri, who is Chairperson and Managing Director, would also be joining the call very shortly. Before we start, may I remind you of Safe Harbor. There may be some, making forward-looking statements that have to be understood in conjunction with the uncertainty and the risk that the company faces. Now, I'll hand over the call to the management for opening remarks, followed by interactive Q&A session. Thank you, and over to you, team.
Hi, good morning to all of you. Good morning, ladies and gentlemen. Warm welcome to all of you for Subros Investor Call for Q2 2022. First of all, let me wish and hope that all of you and your families are safe and healthy. It is fair to say that this has been a challenging quarter for us, having seen a solid recovery through a pandemic and coming out of pandemic in July 2021. But August and September of this year had to contend with the semiconductor shortage and impact of COVID waves elsewhere in the world as well. Apart from this, there are many other challenges in supply chain disruption due to high commodity prices, big increase in container cost, rising diesel prices, increasing packaging costs, and other operational challenges, which has a big impact on our financials, especially on material sales ratio and EBITDA margins. Today, you may have many clarification or questions in this regard. I'll try to elaborate this in my subsequent remarks. The result of Q2 are shared with stock exchanges and also posted on our website. Let me elaborate the summary of the result one by one. First, I'll update you about the industry which is relevant for our business. In this quarter, passenger vehicle industry has performed better and has grown by 4% on production basis in comparison with the corresponding quarter of the last year. Whereas Subros passenger vehicle segment thermal product growth is 12% in Q2 as against industry growth of 4%. We have done better than industry performance due to model mix and also impact of incremental business which we secured from Mahindra for their new Thar project, which is doing well in the market. Commercial vehicle bus segment has registered a growth of 18% in this quarter. Subros has registered an overall of 28% growth in bus segment as compared to the corresponding quarter. Though the tourism sector, school bus business is still to be revived, but ambulance sales are still happening to fill up the deficit, and also each state government is improving on their medical infrastructure to deal with the emerging situation on COVID in future. Further, in commercial vehicle truck segment for N2 and N3 category, which is relevant for our AC or a blower business, has shown upside trend after a gap of 2 years. The industry has grown by 57% in H1 as compared to the previous H1, whereas Subros growth has been 137% in this segment, mainly because of increased AC fitment ratio. Consumer preference is shifting towards AC truck as compared to the normal truck. This is a good scenario, potential and opportunity for Subros. After extended lockdown, in view of opening marketplaces in various parts of the country, impacting home appliances sales, this sector is also showing a promising growth, And for Subros, in this quarter, home air con sales has grown by 170% as compared to the corresponding quarter. Overall, revenue from operation has been recorded at 529.48 crores, around 530 crores in this quarter. Corresponding quarter was 458 crores. Overall, there is a growth of 16% over a corresponding quarter and 10% against quarter one. So overall, on a revenue side, still the performance is satisfactory. Now let me explain on each segment-wise contribution to the sales during the quarter. In quarter two, car and non-car segment contribution ratio is 92% and 8% respectively, as compared to 94 and 6% in corresponding period. Maruti and Suzuki Motor Gujarat sales has contributed 81% of the total sales during the quarter, as against 89% in the corresponding quarter. In this quarter, Home AC contributed 13.46 crore revenue, which is approximately 3% contribution to our overall revenue. Our share of business in passenger vehicle air conditioning market is 41%, although it is lower by 1% as against 2021. And in truck segment, we have share of business of 52%, and in bus AC segment, we have share business of 36%. Let me talk about the operational performance now. As I mentioned before, there are a lot of challenges in supply chain, which has never been experienced by anyone so far. Commodity price increase, logistic cost escalation has impacted the margin in big way. Significant increase in lead time of import shipment and subsequent reduction of schedule by the OEM due to the semiconductor shortage has impacted our inventory levels, which has increased by almost 20% and blocking the cash flows. Commodity price fluctuation in upside to the extent of 30 to 60% in various commodities in last 6 months have impacted significantly on the material sales ratio. And this you will see while comparing the material sales ratio as compared to the corresponding or the previous year period. Though there is a compensation formula for our regular commodities with the OEM, but there is a quarter lag. Further, there are certain non-regular commodities which are used by our sub-supplier as well. The cost impact is huge for that also. We are in discussion with customers for compensation of such fluctuation as well. Container demand and supply imbalance causing steep price increase of import consignment and diesel price increase leading to increase in logistic costs are also key contribution to the margin stress. The company has realized a EBITDA of 37.07 crore in quarter two, which is 7% of the net sales. If you compare EBITDA margin against quarter one of the current year, it has improved by 17%. If you compare EBITDA margin of H1 versus the last year H1, we have improved by 142%, but it is not comparable because the corresponding period has a larger lockdown period. And if we compare this with the corresponding of last year, it is down by 35%. Profit before tax in quarter two is 7.67 crore, which is 1.45% of the net sale. Again, if we compare PBT margin against quarter one of the current year, it has improved by 54%. If we compare PBT last year H1, it has improved by 151%. But if we compare with the corresponding quarter of quarter two, it is down by 73%. Same way, the profit after tax in Q2 is 5.12 crore, which is 0.97% of the net sales. So finally, the summary of financial results is revenue of 529.48 crore, EBITDA of 37.07 crores, PBT of 7.67 crore, PAT of 5.12 crores. Now I'll update on the business side. Business outlook for quarter three is also more or less similar to quarter two because of unclear plans from customers on semiconductor availability. And other challenges is still ongoing. There is no clear visibility that they will be mitigating the impact in near future. Growth in this year is expected to be increasing trend as compared to the last year. We will watch the situation and keep ourselves adjusted to the situation. Despite all these odds, as we have grown by 10% or 16% in quarter one and H1, we are likely to grow in double digits in this year by end of March 2022. New business and product development side, a significant success in securing new business from our customers. Business lineup up to 2025 is almost completed, and this will ensure our sustainable growth in future. Business expansion in tractor radiator is also significantly improving, showing growth opportunities for us in line with our strategic direction to expand business. We have got success in getting tractor radiator business from Mahindra & Mahindra for their important forthcoming program. Development activities for new programs for all customers are in progress, and they will be launched as per the customer vehicle launch schedule. Business negotiations are also on for subsequent business from all the customers. As we reported in the previous call, we secured business from Maruti Toyota Alliance project, which will be assembling car from their Toyota plant in Bangalore. We are preparing our Chennai plant to supply thermal product to Toyota plant for this project. This will improve utilization of Chennai plant and also add to the top line significantly because this is additional business for us. SOP of this project will be mid of next year. So now, thank you very much. Now we are ready to take questions from your side. Any feedback?
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Our first question comes from Mr. Ashutosh Tiwari from Equirus. Please go ahead, sir.
Yeah, Mr. Duggal. Firstly, on this Mahindra business tractors you talked about, so have you started or it will start in future on tractor side, radiator business?
Tractor radiator business which we secured the SOPs next year, maybe quarter one of next year. So that is the important project which Mahindra has planned along with Mitsubishi. That is a collaboration project. So that SOP is next year.
Okay. And okay, this is with the Mitsubishi. Okay. And what could be the peak revenue from here?
It would be around 20 crore per year.
Okay. And do we have? Are you supplying any part for this XUV700 from Mahindra?
XUV 700, we are supplying only some part, partially, not the full system.
Okay, but which part is supplying basically over there?
It's basically the whole piping arrangement.
Piping, tubing.
Yeah.
Okay. And what is the ECM revenue in the current quarter?
AC?
This ECM, radiator sales in the quarter.
Radiator business. So radiator business in this quarter is 73 crore.
And this is primarily as of now Maruti only, Maruti and SMG.
Yes, it is Maruti and SMG. So that is two businesses as of now. But as I mentioned that in future it would be to Toyota supply as well under this Maruti Toyota collaboration project.
And this will start in mostly second half of next year, you said?
Yeah, second half of next year.
Okay. And so in the first half in this home AC business, I think we have done roughly around 42 crores. So what would be the full year revenue we are looking at?
So home AC so far we have done, as correctly you said, 41 crore we have already done. And based on the visibility so far is the business outlook, we have maybe in quarter 2 and quarter 3 and quarter 4 we would be crossing 100 crore mark. So it would be in the range of 130 to 140 crore.
Okay, for full year. Okay. And I mean, in this fourth quarter will be more heavy basically. I mean, generally that's the...
Yeah, because the seasonal business, so it starts normally in November and goes up to April or middle of May. So fourth quarter would be very heavy.
And currently, what is our share of business with Tata and Mahindra?
So in Tata and Mahindra, our share of business for overall Tata buying, whether for CV and PB, we are around 26%, and in Mahindra, we are around 32%.
Okay. And are we expecting this number to increase going ahead?
Of course, so there are two opportunities with us for increasing share of business with both Tata as well as Mahindra. Mahindra, of course, with their growth, we will play a substantial role as part of the thermal product supplier, but also the new businesses which we have tied up or which are in discussion right now will definitely, our target is to increase to 40% in next 2 years' time. So that's where we are working strategically on that. So subject to the business growth as per the market expectation, which is currently volatile. And third also, we have kept a target of 40%, but still truck market or the CV market is still to see a very aggressive growth plan. So it is dependent on the market growth. From a business tie-up point of view, definitely that much potential we have, subject to how market is performing on that.
And when you mentioned that in Tata you have 26% share in PV and CV put together, my guess is that you will have higher share in the CV segment with them.
Yes, of course. CV we have quite substantial share, but PV we lost a few businesses in past, but we are trying to revive that in few of them.
Okay. And lastly, on the gross margin compression, obviously, I mean, consistently we are seeing the increase in RM. So, the first part is that will there be further inflation in third quarter? And secondly, by what time we expect these gross margins to normalize? Like say, will it be 2-3 quarters time frame or earlier? How are you looking at it?
So yes, we have been talking about gross margin or the metal sales ratio for last maybe 4-5 quarters now, and we have seen substantial improvement. We reached to 69% NSR. We again come back to around 73 now. Overall gross margin also crossed 11.5, but again we came back to this one number now. But these are all external subjects which we need to deal and wait for how market is going to stabilize. Commodity prices are continuing on a rising trend. Every quarter we have seen 18 to 25% growth in the commodity prices. And as I mentioned, the compensation formula is quarter-like. So one quarter we have to absorb that and next quarter we'll get that. That is where the overall formula is. We are not sure when it is going to stabilize because maybe the global situation on commodities are unclear. We are not sure how China will respond, how China manufacturing situation will be because of this coal crisis. Power availability in India, which is going to mainly for raw material supplier, is also one of the key constraints, and also demand and supply imbalance is also pushing these prices on the upside. So it may take more than 4 to 5 quarters, but it is not a claim. We are not sure on that. We have to just adjust ourselves based on the market situation.
Okay, thank you and all the best.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question from Mr. Abhishek Jain from Dolat Capital. Please go ahead, sir.
Thanks for the opportunity. Sir, you are also making AC for the hybrid and electric cars, and there will be a lot of the changes will come, especially on the compressor side. So, content per vehicle will increase significantly. So, how do you see this opportunity and how much you are ready for that?
Yes, you're right that when this will move to hybrid or electric cars, only the change point in our kind of product is the compressor side. Rest of the component will remain same, whether it is condenser, piping or HVAC side. so there's no significant impact on technology change for us. So compressor, our partner Denso is a global leader for electric compressor as well, so that product range is already available. The only gap right now we have in introduction of such product to Indian market is OEMs are not yet clear about what are the final specs for battery charge or a compressor side. So we are still adjusting on these specs. As and when they are formed, we will go for sourcing of these parts from our partners. So product availability point of view, product testing and validation point of view, all are ready. So we have to only adjust the final requirement of customer.
So are you also looking for the opportunity in export for this particular product?
So I don't think export would be the key priority as of now, because if India has to change for this electrification or hybrid, India market will have huge potential to first realize. So our concentration being an Indian company, first to meet India requirement, and once we address that suitably, then we will look at export opportunity.
Okay, sir. And sir, how do you see the revenue in the bus aircon business given the increasing penetration of the EVs, where the content per vehicle is 1.5 times versus the normal? So, and as you mentioned that this quarter the number was quite strong. So what is your target for the bus aircon plus that truck aircon business for the next 2 to 3 years?
So bus aircon is definitely part of our long-term strategy, and we are very aggressive in that. And as you said, that this market is moving to electrification faster. So our products are also been now lined up. They are at a final testing stage at many OEMs. So we are ready for bus aircon electrification as well, even with the IC base both sides. So this segment, as part of our long-term strategy, has to cross 100 crore. Maybe now because of this 2 years of deferment of the market, it may take another 3 years or so, more than 3 years, but definitely our targets are intact.
Okay. And sir, in the railway segment, your products are only available in the driver cabin. You were also looking to move into the railway coach. So what sort of the opportunity size is there if you move into the railway coach, and how is your target for the medium term?
Yes, so from driver cabin, we have already started working on coach side, but not on a full AC coach, but tower AC coach. Our product for railway coach are under final validation with RDSO. By maybe December end, we will be able to get it through and start participating in big tenders. Overall opportunity on the short-term basis, we are looking at around 40 to 50 crore per year revenue from this extended segment overall from railway, and finally we have to reach to around 75 in maybe 4 to 5 years time.
So the total opportunity you're looking 75 crores for the next 2 to 3 years in the railway side.
Yeah.
Okay, sir. And my last question is related with this battery cooling model. So have you secured some business from the foreign players in this particular segment?
So battery cooling model, as I mentioned while commenting on the electrification, BCM model is only required when AC, the battery charge per charge is having some spec which is over 500 kilometer or so. So this is one final connecting point with the customer. If they want to enhance battery charge per charge battery capacity, then BCM model will be applicable. So as I mentioned, product is ready, but OEM has to freeze their final specification to include such product into their profile.
And how much big opportunity is there for what would be the average per realization?
So per vehicle realization will be between 4,000 to 5,000, but how much will be the revenue stream from that? That depends upon how many vehicles require BCM. But of course, this will have a delta revenue number.
Yeah, sir. Sir, my last question is related with this supply thermal products to the Toyota. So what could be the incremental opportunity given the current size of Toyota business?
So this alliance project is right now for only one model, which is given to us. So that SOP, as I mentioned, would be the middle of next year. So for us, the incremental revenue would be in the range of 160 crore to 175 crore. So that's the number in case they reach to the RFQ number or projection. So this is the incremental opportunity for us.
Okay. Thank you, sir. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question from Mr. Aditya Makharia from HDFC. Please go ahead, sir.
Yeah. Hello. So just had a question on market share. We mentioned that we are 41%, but I believe at some point we had even reached as high as 44%. So have we sequentially lost some share?
Yes, you're correct. We reached in one of the quarter at 44%. Right now we are at 41% because Maruti has dropped their share of business. So this has a direct reflection on our share of business. So whenever Maruti will catch up to their normal share of business, we'll definitely be recovering.
Okay. Fair enough. Second thing is on Tata. Are we supplying the e-compressors for their Nexon EV and the Tigor EV?
Not yet.
Okay. And thirdly, sir, just on a broad note, with Denso coming in, with a high equity stake maybe a year and a half ago, any export opportunities or global sourcing opportunities which are visible, or anything you can throw light on?
So Denso collaboration enhancement through equity model is mainly for providing us more business opportunity in India and also to give us more technology for India application. That was the primary objective. So first we need to realize that before we start talking about export opportunity or participating in their global strategies. So right now our emphasis is that we need to update our product lines to meet the requirement up to 2030. So that technology roadmap we are almost on a final verge of completion with Denso, so that we secure our business till 2030. All required technologies, suitable upgradation, product upgradation, we need to first enhance to. So that's our engagement right now.
Got it. And just last housekeeping question, the car AC business turnover in this quarter was how much?
Car AC business turnover in this quarter is 486 crores.
Okay. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from Mr. Ashutosh Tiwari from Equirus. Please go ahead, sir.
So this car AC sales number that you told 486 crores includes the ECM, right?
Yes, car business means including ACM, and ACM, as I mentioned, is 73.
Yeah.
So net of that is 413 for car aircon.
Yeah. And what was the revenue from this commercial vehicle truck segment in this quarter?
Truck segment has contributed around 14 crore.
And you mentioned that you are seeing the improvement in share of ACs in trucks. So what is the share of ACs at industry level, maybe last quarter or this year so far?
So for our relevant business, which is N2 and N3 category, share of AC business has improved when we maybe in January 19 when this regulation was changed from aircon to blower. And at that time, the AC ratio was around 9%, and which has already improved to around 20% now. So we have seen that even with the optional number, the truck aircon business has improved to around 20% of total N2, N3 category.
And roughly, what is the content of these AC in a truck? It's around 2,000 rupees?
No, blower is having a range between 2,500 rupees to 3,000, and AC would be between 12,000 to 14,000.
Okay. And buses would have been very low in this quarter. The revenue from buses.
Yeah, because the market is still opening up for relevant to the bus sector.
So I think in say next year the growth will be primarily driven by one, industry revival, and new business in ECM and truck revival. These three will be main drivers. Railways and all will probably come through in FY24. Is that correct assessment?
Yeah. So the main drivers will be these what you said, mainly dependent upon how the market is going to revive and how fast it is going to revive, unless all challenges are addressed suitably. And of course, the Delta business which we have secured for next year, they will be the key contributor.
Okay, I got it. And capex for this year will 144 crores. The full year number will be how much?
So this year, overall number against capex would be between 80 to 90 crore. That is mainly because of the new projects which are currently lined up. So investment on that, new technologies which are lined up, these are the investments which we have already committed, so they will be there.
Okay, got it. Thank you. That's all from my side.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our next question from Mr. Abhishek Jain from Dolat Capital. Please go ahead, sir.
Sir, this year, as you mentioned that you are targeting around 130 crores kind of the revenue from the home AC segment, although the first half was quite weak. So for next year, and for FY23, what is your target for the revenue and margin from home AC segment?
So as I mentioned before also that home aircon is more of a seasonal market, so it is not comparable between quarter on quarter. So normally this season starts between November to mid of May, or so April end or mid of May. So that's why they are not comparable from a period perspective. So as I mentioned, this year we are targeting around 130 crore. Next year we have to cross that. So based on the market situation, how the revival is and how the other risk factors are, definitely the numbers growth will be much higher than what we are going to close in March 22. Margins, of course, are challenging in this segment because of the major commodity price and mainly the dependency on copper, aluminum. They are the major contributor here. So OEMs have to adjust prices based on that. So that's how the margin can be kept on that. So still this is a key challenge as of now in this segment.
Okay. And my next question related with the PLI scheme. Are you looking to take a benefit of the PLI scheme through some capex?
So we are at a final stage of finalizing our product lineup for eligible for PLI scheme. So we are in discussion with the government also if we can factor in certain products which are for technology upgrade or for localization, which can be made eligible for PLI scheme. So such discussions are on. Give us more time, maybe another 2 to 3 months time, maybe next call we'll be able to have more clarity how government is going to accept us. But of course we are very keen and we are very aggressive to qualify under PLI scheme for our future projects.
So you are applying PLI scheme for the home AC segment or is it for in a passenger AC segment?
Passenger. We are targeting for passenger at this stage.
And what would be the capex size?
No, we have not yet concluded. Please wait for one more call. I think we'll be much more clear about the lineup, which kind of product we are making this eligible under PLI scheme and how much would be the investment. Please wait for that.
Thank you, sir. That's all from my side.
Thank you, sir. So our next question from Mr. Aditya Makharia from HDFC. Please go ahead, sir.
Yes, I just wanted to clarify in terms of our major raw material, would it be steel or will it be copper and nickel?
In which product you are asking?
For the car AC?
No, material is all commodities are currently at a peak. So normally what we are using is aluminum at the first consumption number, then is steel, plastic material, various grades of plastic, and then copper. So copper mainly going into home air con, but less into the car or the bus air con products. But of course, all commodities has impact. So only the quantum may be different, but impact is there.
Got it. Okay. Thank you.
Thank you, sir. The next question from Mr. Dhiren Shah from Phillip Capital. Please go ahead, sir.
Yeah, good morning, sir, and thanks for the opportunity. So my question is pertaining to our EBITDA margin. So whatever margin impact we have seen because of the hike in the raw material cost, so are we able to pass it on, or we have to take some kind of a hit on our margin, sir?
So in my opening remarks, I elaborated on that. So there are two aspects to that. There are certain regular commodities where the compensation formula is available with the OEMs. So there only the gap is there is a quarter lag for compensation. So one quarter we have to absorb, but next quarter we'll get the recovery of that. So only the volume change impact between quarter would be the hit on the margin side. That is one. Number two is there are certain extraordinary variation in commodities where the compensation is not there. It will be one-time claim. So we are in discussion with the customers for that. Right now they are charged to the P&L. So that's why the impact is visible on MSR as well as on EBITDA. But as and when we settle with the customer, we'll try to adjust our financials accordingly. And the third area where the hit is maximum is there is no compensation formalized on the logistics side, where the container costs or the logistic cost increase are there. So they are also under discussion with the customer for price adjustment. So again, whenever we get that settlement done, we'll adjust our financials.
Okay. So by when, you feel that our EBITDA margin would again bounce back to double-digit figure, you know?
It depends upon how the market is going to stabilize, because last maybe 2 quarters we have seen each quarter has a different challenges, and there are spikes coming in between quarter to quarter. Once market gets stabilized, only after that we can get benefit of our operational efficiencies. Right now we are struggling to meet the challenge or deal with the challenge which are there in quarter-on-quarter basis. Right now, for example, in last quarter too, we are hardly consuming our capacity. So the utilization is low because almost 40 to 50% volume fluctuation is on the downside. So that definitely all these surpluses will hit the margin performance.
Okay, so at least for next 2 quarters, sir, we feel, because of the lower utilization also, maybe our margin would be suppressed.
Yeah.
Okay. Thank you so much, sir. That's it from my side.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our next question from Sonal Kohli from Bowhead Investments. Please go ahead.
Thank you for this opportunity. Sir, my query was that, once, you just answered that for next 2 quarters, you expect your margins to be suppressed. So do you expect that you will not achieve your full capacity in next 2 quarters?
So again, I have answered this question before as well, but it all depends upon customer recovery from the current crisis of semiconductor. So on the one side, the demand has not come down, but it is mainly issue of supply of commodities as well as semiconductor availability with the OEM. Whenever they will resolve this issue, we will be very fast in ramping up and utilizing our capacity to the previous level. So it is all depend upon how customer schedules are, and right now we have no visibility beyond the 2 months. That's where we are adjusting on a short-term basis. Whenever customer will announce plan for more than 2 months, definitely will be more clear how the performance would be. It is right now on a guesswork only.
The second, my query was, considering all the raw material costs for you pass through, as and when, whenever, whether it's March quarter, June quarter, September quarter this year, or any other year, you start achieving your optimal capacity utilization and the metal prices stabilize. Is there anything else which will prevent you from meeting your, 11% kind of target margins you had mentioned, Is there anything else beyond these two?
No, we have to reach to the normal level as and when the situation improve and come back to the level of maybe the best year we had was 18-19. So if we resume to that level of capacity utilization as well as on commodity price on the margin, so definitely we'll be achieving such numbers. So maybe another 2 quarters we have to wait to come at the final conclusion, but will be the sustained level of performance.
But sir, isn't it fair to assume that your margins will be less because you will be getting a fixed gross profit per vehicle, or do you get compensated on a gross margin basis? So let's say metal prices goes up 50%, your gross profit per vehicle will eventually not go up 50%.
Of course, because the compensation will be for as a reimbursement, so that much impact will be there. But we need to see how the commodity price normalize to the previous level. Then we will be able to get the proportionate benefit. But as of now, your assumption is correct.
So lastly, when you were answering the Denso question, my line got disconnected for a minute. What I wanted to ask you was, on the Denso front, on the domestic side, are there any products or initiatives, my apologies if you answered this, which you expect over the next 2 years which would help you increase in top line, and would these be material or these would be very small?
So the question which I answered before was that what are the key growth drivers for subsequent year, and the answer given was that growth drivers are dependent on the market growth, how market is going to revive next year. And of course, the bases are low because 19, 20, 21, 22, we had a COVID period and substantial part of the year was under lockdown. So from that comparison, the growth drivers will be, from compared to the 2-year performance, will be much higher. In addition to that, we had some new businesses which will be lined up in 22, middle of 22. That is Maruti Toyota project, collaboration project. That would be adding to Delta, and there are certain few orders which we got which will be commissioned next year. So they are the key drivers for the 22-23 performance, and of course it would be as per our current expectation, it would be in better performance than previous.
So my query was specific to domestic Denso. So are there any products from domestic Denso which you would expect, let's say, over the next 2-3 years period, which could help you further? Or that's a
from domestic Denso, you said?
Yeah, some new products introduced by Denso, which could help you scale up further.
So in new product lineup, I think we clarified this in before also that we are launching a new technology compressor, which is vein rotary compressor. That is already lined up for Wagoner. It has started production last year, and now it will be going into the new Baleno. So that would be how the utilization of new compressor would be. That is mainly to meet the regulatory norms by the OEM because of the CAFE and BS6 requirement. Of course, there will be some delta because that rollover will be to much larger family of models as compared to the existing. So there would be delta, but that delta would be, if you see a short-term view, it would be between 50 to 90 crore delta. But going forward, it would be substantial.
And there's nothing beyond this you expect from Denso over the next 2-3 year period?
No, in a short term, no.
When you say short term, you mean 2-3 years or you mean next 6 months?
2-3 years. 2-3 years is the short term.
Oh, I see. And you've already answered the question that there's no plan as far as to cater to the Denso, export business as of now.
Yes.
Understood. Thank you so much.
Thank you, sir. The next question from Mr. Nikhil Deshpande from Axis Capital. Please go ahead, sir.
Yeah, good morning, sir. Thanks for giving me the opportunity. Sir, could you just guide on how has been October in terms of production levels with OEMs, and how have they guided for the next few months regarding this?
So October month is no more different from September. So it is more or less in the same line because the semiconductor shortage remains constant. Whatever short was there in September, same is there with October. So most of the OEMs are maybe keeping the same production level of September. And currently the visibility of November is also in the same line of October, although the number of working days will be lower than October, but maybe the numbers, final output would be in the same range. There will be maybe a delta increase of 5-7%, but not substantial.
And so when are we expected to come out of this issue? Not to normal, but to a reasonable level.
I don't know because this is beyond our assessment, because semiconductor manufacturing is currently a constraint, and especially in one or two areas where the constraint is maximum, but we have to go by the OEM schedule. We can't make any assessment on when the OEMs will be reviving, but we are just adjusting based on the OEM declaration of schedules.
Thank you for
Thank you, sir. The next question from Preeti RS from UTI AMC. Please go ahead.
Thanks, sir. So I have a basic question on what is the difference in realizations for a AC case that goes into a diesel car, petrol, and also EV in future?
So there is no per unit difference between AC going into CNG or petrol or diesel. So there is no criteria of differentiating air con between these three applications. That is one. And number two, as if you compare to electric, so from a basic AC loop, there is no change other than compressor, and compressor, if it has to change, the delta is between 8x to 10x. So electric car definitely will have overall, if you compare AC to AC, will be around 4x on a full system basis, but between IC, CNG and diesel, there is no change.
Okay. So we confirm, so it could be anywhere 4 times more compared to ICE architecture. Is that what you're saying?
Yeah, if it is electric, purely electric from the conventional AC.
Right. Sir, and do we have the technology and also the product in place already? And what stage we are in terms of, let's say, validation, etc., with the EVs that are already in the country?
So EV product range is available through our collaborators, so there is no constraint on that. But right now the volumes are not enough to push for any localization investment because we have unclear plan of ramp up. Each OEM has a differential aggression on how the EV vehicle will be moved into the market. And also because of this COVID situation, the plans are further derailed. So we need to keep watch on. Maybe by 23 end, we'll have more clear number projection till 2030, how these numbers will be, because of course for electric compressor, if you have to localize, the investment would be very, very substantial. So we need to be careful of taking investment decision based on customer final assumption on how they will be ramping up on the electrification.
Okay. So just last question on the same. Could you help us understand what is the difference, why it requires a different compressor, etc., in EV, and hence such large difference in realization?
So the technology is completely different. In case of conventional IC engine, the technology is fixed displacement, and these fixed displacement, the drive is engine. So engine drive compressor, and compressor generate the compression part of that. But in case of electric, there is no engine, so drive has to be built inside the compressor. So that's how it is called electric compressor. So this technology is completely different from conventional.
Understood, sir. Thanks for this. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. So our next question from Mr. Nikunj Kala from Principal AMC.
We understand there is an issue on the supply side on account of semiconductor shortage, and hence it becomes very difficult for us to understand the actual demand of PV on ground. But according to your experience, if the situation on the supply was normal, when do you think on a PV we can see a significant upcycle, starting, for the significant in the medium term?
So again, I am not able to make any estimation or guesstimation at this stage when this semiconductor issue will get revived. But my only point, which is more positive from my thinking, is that demand of vehicles have not come down. It is only the availability of vehicle which is impacting the overall market. So demand remains same. So whenever there would be a supply side normalcy, I believe the lead time for demand growth will not be more. Same quarter you will see a drastic change in expected numbers, and of course the lead time will not be very, very high.
Okay. So in the normal scenario of supply side, do you believe we are in an upcycle of PV starting in this year or next year? Because we have seen last 2-3 years of significant lower volumes in PV side.
No, we are not into upcycle. I think the market was into a V-shaped recovery whenever we just came out from first wave of COVID. And V-shaped recovery is happening only in two scenarios. When one, you have a off-cycle recovery period, and second, people are holding on to their demand because of any other circumstances. But whenever the market is available, the demand is pushing the market. So we still expect that whenever there will be normalcy in the supply side, this V-shaped recovery still remain, at least for next 2 to 3 years time. That's my assessment, and that is only my assessment.
Okay, so of course, from your experience, we need your comment. But despite the total cost of ownership increasing on account of fuel increase or commodity inflation, you believe that upcycle is still there, and demand would be still intact. So there won't be much of an impact.
Indian consumer is having a completely different sentiment. When the petrol, diesel were at 12 rupees, 50 rupees, we made the same comment, and now it is 100 rupees. It is the total cost of ownership can be seen from a different perspective. So it is mainly on the application side. Cost is not the deciding factor primarily. It can be only influence of 5 to 7%, but not completely.
Sure, sir. Thank you for the comment. And secondly, just want to understand on the capacity utilization front. So on our total gross block, currently, what would be our capacity utilization?
In the current scenario, we are utilizing not more than 50%. So we are at around 45-50% only. Whenever it was peak, at that time the utilization was between 80 to 90% on a variable basis. But right now we are below 50%.
So in that case, even the upcycle will remain strong for next 2-3 years. Our capex requirement won't be that high, apart from the greenfield which we are doing.
Yeah, it will not be substantially high. It will be only for debottlenecking or certain new capacity or new projects investment, but it will not be a substantial. No greenfield investment is planned for next maybe 5 years so far.
Sure, sir. Okay. And lastly, on the profitability, I think in one of the comment, I missed the, your comment on whether we make on a per unit basis or on a percentage profitability, in the upcycle of the raw materials.
So yes, the comment was basically that if we get a compensation of commodity and other cases, the margins will not increase proportionately because we are getting only the reimbursement in the top line, and the same is impacted in the cost side also. So that was the comment and which we clarified.
Okay. So just for my understanding, if 100 rupees the ASP and we make 10 rupees, when raw material goes from say 70 to 90 rupees, so our realization will increase only from 100 to 120, and hence on 20 rupees we won't make any margin, right?
Yeah, 20 rupees we will not get that 10% margin which is there in 100 days. So that was the clarification.
Okay, but this is the phenomena in the short term, or in the long term, if 20 rupees persists, then we would be compensated for that?
Yeah, because all these compensations are on an actual basis. So if whatever is our impact, then the same will get compensated. The customer is not going to add margin on the compensation. So, but the only point is if it remains with us for 2-3 years, we can optimize on the efficiency side, and then only it will contribute to the margin. But from a mathematics point, it is X added to the top line and X is impacting on the bottom.
Okay. So what is the threshold ROC we are working with then in that case?
So ROC, it was a normal business. We reached to 18%, and before equity it was touching 19.9% or so, roughly around 20%. So that is the threshold we want to achieve initially as a base, and then we will ramp up from there.
Yeah. So at any point of time, on account of inflation or on account of decline in the margins, if that threshold ROC goes to 15% or 14%, we can negotiate with the OEMs and get it back to 18%. That understanding is correct?
Case to case basis it depends, or otherwise we have to ramp up our margins through internal efficiencies.
But sir, is there any further scope of improving the efficiency from here on?
Yeah, possible, because productivity is something which is a more dynamic subject which requires continual improvement, and that can add to the efficiency and the margins as well.
Sure, sir. Thanks a lot for your time, sir, and thanks for the information. Yes.
Thank you, sir. So our next question from Mr. Sachin Trivedi from UTI Mutual Fund. Please go ahead, sir.
Hi, sir. Thanks for taking my question. Just one quick clarification on the capex that you cited. Let's say, I know it's a hypothetical question at this point in time or too early, but you said that when in a EV scenario, there has to be a substantially higher investment. Is there any quantification of, let's say, for like-to-like current capacity, what kind of investment that we might have to take? And what kind of fungibility of existing infrastructure would be there in the new environment?
So I clarified this point. I'm again re-emphasizing on that. On electrification or electric car, HVAC, hose tube, condenser, there is no change in technology, so there is no additional investment required for technology per se. It will be only for the capacity as and when we cross our threshold. But in case of compressor, it's a completely different technology. Electric compressor required to have a self-drive, whereas in a conventional compressor, it is an engine drive. So investment size, investment timing will depend upon when customer is going to freeze on their electrification car specification. So, and also the substantial numbers should be there, and the clear visibility till 2030 should be there to kick off such investment, for how much capacity, for what kind of specification it could be there. So all these are yet to be concluded. So at this stage it will be unfair for me to quantify any investment and give excitement to the market.
Sure. Okay, and just okay, there is no investment guidance that you want to say, but and just one final question on the existing structure that we follow with our OEM. This is with respect to let's say you were answering in the previous question as well, that like-to-like customer will give us the compensation for the entire raw material inflation. But how about, let's say, in the inflationary environment, we have to hold higher inventory as well. So does the customer give us some compensation for that higher inventory as well?
Not as yet, because we have not seen such a big fluctuation or such a big volatility in forecasting and keeping inventory with us. So far, that experience has not been there. This is extraordinary situation, and we are in discussion with various customers, but at this stage, I can't comment whether the discussions are progressing well or not. But we need to wait and watch, because nobody has any control on any number or any impact of such number in the whole value chain. So we have to be fair with each other.
Sure. Okay. Thanks.
Thank you, sir. Our next question from Mr. Sonal Kohli from Bowhead Investment. Please go ahead,
Sir,
sir.
I have 4 queries. Firstly, 2 straightforward ones. Considering the not major capex you're expecting, what would be your depreciation, let's say, in 2023? And what kind of tax rate would you be subject to, let's say, in 2023 or 2024 on a reported basis?
So you have question about depreciation forecast for 23 and the tax rate for next year. That's what your question is?
Yes.
Hemant will answer that.
So depreciation forecast for the next financial year is approximately 100 crores. It will be slightly higher.
Okay.
And on taxation front, for P&L perspective, yes, it will remain 33%. And definitely from cash flow perspective, since we are paying under MAT, so it is 16.5%.
And so, do you expect any point of time the tax rate to converge to the reported corporate tax rate, and if so, in which year?
Yeah, so corporate tax rate from P&L perspective will be 33%.
But let's say beyond 2023, what do you expect that to fall?
We will come to 22% in the financial year 24-25.
We'll come to 22% on a reported basis in 24-25.
Yeah.
The point which is that is right now we have a MAT credit. By this time this will get rationalized. So after that we'll come to the normal corporate rate which is available.
And sir, as far as 2024 is concerned, would your tax rate remain 33% or what would it be?
To repeat it?
For 2024, you told me about 2023, you told me about 2025. My question was, what happened in 2024? Will it remain at 33% or will it start falling in 2024?
Okay, the company is having a MAT accumulation. The company has already paid the tax to the department, which is yet to be realized. So we have paid the tax under the MAT, which will get squared off in the financial year 24-25. So once our MAT accumulation will be adjusted, then we will start paying under the new tax regime of 22%.
And before that, even in 2024, your tax rate will remain 33%, right?
Yes.
And considering you don't have much capex plans, your 2024 depreciation should not be very different than 2023 depreciation.
Tax level will not be. Depreciation will be around 100 crores.
Okay. And sir, as far as your EC business was concerned, assuming normalcy, obviously all questions have implied assumption of normalcy, you had made a certain forecast. Considering the metal, price increase sector, what is an equivalent forecast? So let's say you had a forecast of, if I remember correctly, 250 crores or 200 crores, somewhere around that range, with the increased metal price, what would be a normalized production, or has certain assumptions changed, like the business is itself not viable, therefore those forecasts don't hold true?
I'm not able to get your question. Can you be just a little louder?
My apologies. My question pertains to your home AC business. Earlier you were expecting a 200 to 250 crore turnover over a period of time in your home AC business.
Okay.
Considering the metal prices have increased, obviously you're not going to charge the customer same what you had told us 2 years back. So what I'm trying to understand from you is, what will be the equivalent number of that 200 to 250 crore, which you would have told us, let's say, a year, 1.5 years back in one of these calls? What will be the equivalent number at current metal prices for that business,
Okay. So, yes, we gave a forecast of 200-250 crore on this domain, and subsequent to that, there was a metal prices fluctuation. Now we have settled in few cases some formula with the customer, either for a month lag or a quarter lag. That's how we are adjusting the cost impact on such product segment. The forecast will remain same. Only we have given you a short-term sight of 130-140 crore for this year, and for next year we will be adjusting based on how the market will be and how the other risk factor will be. But since these products are going for home appliances to the retail market, I believe here customer has some visibility of adjusting price to the end customer and give a benefit back to us. So accordingly, our overall forecast has not changed. That 200-250 crores still remain. Only there will be period gap, maybe a gap of 1 year. We'll come back to this target level.
But if the metal price remains high, if your volume forecast is same, wouldn't the revenue forecast increase?
It will increase. It will increase by 10 to 15% because that will be the impact on the overall unit.
Oh, that's it. Okay. In terms of metal prices. And sir, lastly, on the Toyota business, while it may be a little too early to ask you, what do you think is the potential for this business from you over next, let's say by 2025, 3 years down the line? You could make wide range estimates, but what could it be could this be the biggest mover for you after the car recovery? Or, when you look at your growth drivers from a 3-4 year perspective, in addition to Maruti's growth rate, what would be the number 2, growth driver for you? Would it be this one?
So answering this, your question has two different aspects. One is from the Toyota side, what are the growth opportunities available? So right now, the visibility which we have is this Maruti and Toyota alliance is only limited to one project. And that project we have got 100% business. So whenever this project will be launched and whatever ramp up will be for the capacities they have agreed between both the companies, that much number we will get. And that's how I indicated a target of around 175 crore as a delta to us. Now substantial to means post that how Toyota would be growing and how we will be contributing. Right now we have no engagement other than this project with Toyota directly. So this is the first project which we have to experience with them, and there is no additional RFQ also which is in pipeline. That is on the first set of your question. Second is after Maruti and Suzuki Gujarat, the key driver for us in our kind of product domain is definitely Mahindra, which is quite promising, and Tata. These are two key customers which we are working with, and they will be participating in our growth story on our passenger vehicle segment. And of course, on commercial vehicle segment, we are present with all the OEMs, so we will meet their requirement wherever it is. But of course, we are eyeing on that new regulation which is expected, which was utilized in January 19. Originally, it was aircon in N2, N3 category, but it was normalized to blower. But once we reinstate that original regulation, the delta of 150-180 crore of turnover definitely will be there because AC will become mandatory for that category of trucks. So these can be the key drivers as of now, but right now the situation is fluid. You have to just bear with us.
But from a 3-year perspective, it's fair to assume that those regulations will flow into, right?
Yeah, that's true. That's what I said. The opportunities and potential is available with a span of 2 years, 3 years time. But we need to just adjust from the current market situation if it is prolonging and if it is not reviving as we are expecting.
And sir, considering the kind of complexity involved in changing vendors, is it fair to assume that there's no scope of, as far as existing products are concerned, for you engaging with Toyota? That would be only for the new products being created.
Yes.
Great. Thank you so much.
Thank you, sir. The next question from Mr. Ashutosh Tiwari from Equirus. Please go ahead, sir.
You mentioned that the content of AC in EVs is 4x higher. Is it only the compressor part, because other parts will remain similar? So is it the inflation 4x is for compressor only, or other parts compressor only 40% of the total AC, right? 42%, 40%.
So yes, as I mentioned, the change point is only electric compressor. So rest of the part, technology-wise, there is no change. So that's how, as I mentioned, compressor is say 7x, 8x, but on the total overall system, it will be 4x. That's how this number.
Compressor will go 7 to 8x. Okay, I got it. Okay, thank you. That's all from my side. Thank you.
Thank you, sir. And the last question comes from Mr. Nikunj Gala from Principal AMC. Please go ahead, sir.
Yeah. Hello. Thanks for the follow-up. Sir, what would be our normal maintenance capex per year?
So normal capex in the normal year is between 40 to 50 crore. That is for maintenance capex, for any machine replacement or for adjusting the peak or bottleneck operation. That's the capex we normally have.
Okay. So given that, assuming there is no growth and, if today's plants are going to, sustain for the going concern basis, we have to incur 40 to 50 crore, right? So in that case, the depreciation, reported depreciation of 100 crore and the maintenance capex, from the cash flow perspective, there is a cash inflow of 50 crores, right?
So that's what we said, that mostly our investment will be through internal accruals only, and if internal accruals are that our investment is less than the depreciation, so definitely it will be more productive.
Sure. Okay. Thanks for the clarity, sir. Yeah, thank you.
Thank you.
Thank you, sir. Now I hand over the floor to the management for closing comments.
So broadly, we have covered most of the points which everybody asked, and I understand the curiosity is more on when the market is going to stabilize, and unfortunately, I don't have the direct answer to that. But still, we are hopeful that our hope is more positive because demand is not reducing. It is only the availability of vehicle which is impacting the overall market. So whenever we reach to the normal level, the market is going to grow. Still, we are hopeful that V-shaped recovery, which was there before the second wave, will remain available, and that will help us in growth for our long-term targets, which we have fixed in. We are very clear in our plans for expanding each and every segment so that our dependency on one segment will come down. So that these are the things which we are working on right now. So with that, this is all from my side. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Aditya Birla Money, this concludes the conference call for today. Thank you for your participation. You may all go ahead and disconnect your lines. Thank you and have a good day, everyone.
Thank you. Thank you.
Thank you.
Your conference is no longer being recorded.